I'd like to maybe give just 5 minutes here so that we can talk a little bit about each one here, so that you guys understand why we believe we can discuss a little bit about credit and about hedge fund or private equity structures down here in Brazil. I've been in this industry for about 15 years. I'm a managing partner of DXA Investments. We're more focused on private equity, but we're very much agnostic. I was a partner in a couple of other firms also in the past, large hedge funds and credit shops also. And I'd like you guys maybe to talk a little bit about yourselves. I know you guys very well, but they don't.
Good afternoon. My name is George Wachsmann. I'm a founder and partner of BAWM Investments. We are an independent advisory team based in São Paulo, helping clients in Brazil and offshore to invest in our opportunities here. I've been in the industry for 18 years, and the idea is to give you a little bit of the view of how we are approaching the credit opportunities in Brazil to our clients.
Hi, my name is Marcelo. I'm a founding partner of RB Capital. We are an independent, fully fledged real estate capital and financing provider in Brazil, 100% focused on real estate. Been in the field for almost 19 years, doing very much structured finance and investments in real estate, and we will talk about this asset class as well during the panel. Thanks.
Good afternoon, I'm Rafael Amiel. I'm the Director for Economics in Latin America, IHS. I'm very honored to be in this panel with the distinguished leadership of the investment community here in Brazil. I'm an economist, not an investment director. So IHS is a source of information for economics and other part of the industry.
Thanks, Rafael. So I think there's a couple of thematics around what we're discussing here today. Of course, we're going to talk if there is a credit bubble, but also I think it's important to understand where we're coming from in Brazil, and also how we believe from an investment standpoint you can participate. I don't know how many of you have seen in the last couple of weeks and months. The President Dilma has been trying to enforce new laws and new measures to try to reduce the credit spreads. Because today, if you look in terms of nominal rates in the country, we're talking about 9%. But if you're an individual, you're going to take a loan in the bank, you're still going to pay 30 to 40% a year. So more than 4,000 basis points just of differences in terms of credit spreads. If you're talking about credit cards, it can go up to 200% a year. So we have here Rafael from an economist standpoint, Marcelo from an investor standpoint, GP, and George from a allocation standpoint to discuss about this. So maybe, George, I'd like to start with you. If you could give a little bit of an overview of people didn't used to invest in credit strategies as an allocator, and now this is becoming more and more of a strategy. And then we can discuss about, is this the end, or still there are more opportunities or not?
Well, I think you were definitely right, Oscar. When we started, just to make it as a relationship, when we started 7 years ago, we had zero investments in credit for our clients. First, because clients are afraid of credit, and second, and probably most important, because there were no such good opportunities in the credit space. What we've seen in the past 5 years or so is that there is an increasing play in the markets for companies trying to diversify the way they're raising capital, and thus providing new instruments to the market. Second, a number of players looking to dance the same music with the banks, so trying to participate in this market that was primarily taken by banks. And third, clients looking for to enhance the yield of their investments in an environment where interest rates are going down, so they're looking to add alpha to their investments. And so what we have been doing, particularly, we have been exploring the structured credit space with a strong emphasis for the past 2 years, with structures such as FIDCs, which are, as you mentioned, close to a CLO that worked, that was successful, where you have like different tranches and you are protected in different ways for the downside, or with different ways to explore real estate credit, to explore direct credit and others. So it's I think we are, in my point of view, we are in the beginning of the cycle from the investment point of view. I still see most of my competitors a little bit shy on that avenue because they don't. It's a different thing when you in Brazil, when you invest in equities or in hedge funds. It's one way. There are now there are a small number of players, and it's new. It's different. So
can you give an idea of a size of your average portfolio since you manage a family's money?
Well, currently in the local portfolio we have probably about, I think, 10% 10 to 12% exposed to structured credit. And when I'm saying structured credit, I'm not including CDs from banks and something that we treat almost as a quasi money market.
One very interesting thing that we see abroad happening, either in Europe or in the US, is the ability of hedge fund managers to participate in the same markets as banks, and therefore creating more of a competition, and therefore having smaller and smaller spreads. Marcelo, has this been the case with you guys also, and what kind of insights can you kind of talk about as a manager playing the market?
Right. Actually, in Brazil, I mean, talking more particularly on things we do in the real estate arena, we play much more on the disintermediation side, right? So what we do is to channel resources from the capital markets to the real economy or to the real estate sector, which the banks usually don't do locally here. In Brazil, the real estate sector, let's say, has been underbanked or underserved in terms of credit and financing for decades. So it was only the Federal Housing Bank, Caixa Econômica Federal, being there for the sector, and it's been like 6 years. We've been doing this for 20 years, just trying to breaking ground. But it's been over the last 6 years that this has changed significantly, and now these capital market providers, channels of funding, have been directed towards real estate. But the banks, they continue, as we see locally, very much only providing mortgage as because of the regulation. That's because the central bank says you must direct 2/3 of the saving accounts towards housing financing in Brazil. Otherwise, they are not there really providing credit and financing for the real estate sector. So I think here it's been a more structural difference because the banks are much more keen on granting credit on the consumer side, given like the rates that you mentioned, 200% of the credit card, 50% a year on a traditional consumer financing of goods or good purchasing and things like that.
Do you see measures that are going to be allowing more funds to enter also that market?
I believe so, because now on the regulation side of the fund management practices in Brazil, given that the CVM, they have updated the framework. So it's been much more investor friendly on the REIT side, on the MBS side, and now on the debentures that are backed by infrastructure projects. So infrastructure backed papers that are aiming at the international investor community are tax exempted. Obviously there is some eligibility criteria to be matched, but if duration is over 4 years, it is infrastructure related, indexed to inflation, and more on a project financing approach, then this fixed income instrument will be tax exempted, which is a very strong government initiative to start bringing money for the local fixed income papers, which have been very unattractive.
Yeah, especially the IOF tax, the transfer tax, right, which is 6%.
6%, and the withholding tax, which is 15%, right? Which the investors don't have on the TBO, on buying NTN-Bs, which is very asymmetric when you compare sovereign bonds and the structured credit private sector papers.
Coming to the economy side, right? Good, I'm an economist also, so it's good we're together. But in essence, how can you really say that there's a credit bubble when credit is less than 50% of the GDP, okay? And when you're still seeing spreads, as we were discussing here, how can there be a credit bubble on that sense? Of course, there might be some markets there, but we're talking about Brazil in general. So if you could give us, Rafael, a little bit of your insights on that, would be great.
Sure. Thank you, Oscar. Yeah, we don't challenge the idea that credit has so much room to grow in Brazil and in most emerging markets. Credit is slightly below 50% of GDP, whereas in Chile it's 80%, in China it's 100%, and in any developed or industrialized economy, we're talking about ratios above 100%. So there is room for growth. The question and the problem is the speed of growth. Credit was 25% of GDP back in 2005. So we don't see possible or feasible that credit move to 100% of GDP in the next 7 years. The speed at which credit is growing, and I'm talking about finance, banking credit to the private sector, cannot grow at this speed farther. Basically because I have done exercises, I have deflated credit by the number of, well, first by GDP, by nominal GDP, by the payroll of the whole country, by the amount of people going into the middle class. Still you have a sizable growth that is not explained and couldn't be paid. The major risk is the deterioration of the asset quality of the banking system that we see. If you see, for instance, what happened...
Sorry to interrupt, there was a big wealth creation also during that period, right? So if you do this adjustment towards the wealth is not that big of a growth, right?
Yeah, but wealth in terms of what, of Bovespa growing up in terms, we rather do credit to income. But yeah, you're right. I mean, it's, my answer is there a credit bubble? Yes. Is it going to burst in the next 12, 18 months? No. Is there evidence that it's disinflating? Not a strong evidence. But for instance, if you see the non-performing loans of the banking system from December 2012 to February, which is the latest data, on consumer loans or credit to individuals, it went up from 5.7 to 7.6. During the crisis, June 2008, June 2009, it grew less. Well, it grew from 7 to 8.6%. But still, the overall asset quality of the Brazilian banking system, which is manageable, given the spreads that you mentioned, not the sizable profits that banks make on consumer loans, it's about 4 or 5%. You compare that to Chile, Peru, Mexico, all of them are below 2%. We don't like the speed of growth of credit, and I think that everybody's aware in Brazil about that. I'm not talking about you, because when you're talking about structural finance, or you're talking about investment going into infrastructure from private parties, from big families, that cannot burst, that can have a negative macroeconomic impact, because they're going to be a run on you. You just take the risk of your private investors.
Just add a couple of comments. I agree with you, but the way I would put, if we mix together what the previous panel spoke about and the points you mentioned, I think that yes, we had incredible growth in credit in Brazil, and that is now at a point where people are saying it looks like it is tired, right? So the system, it's at a point where banks are posting numbers of increasing losses and this. But if you look on average, it gives me a sense that there was a lack of credit in the economy, and it was filled like as in if you were in a vacuum, right away. And then you are now adjusting. But when we adjust, you're going to see that we are yet far from the levels that you mentioned from other countries that are in equilibrium. And for example, if you think about credit in terms of income for individuals, is less than 25% of income. If you look at what GDP for 2012, we're at people at 3 something. It's less than the potential GDP. So I think there is room on we can be like hitting some local walls, but not on a global point. I think we still have room to go. But I agree with what you're saying. From our point of view, in terms of an investor, I am more afraid to not be able to replace the investments that I'm currently doing in the next 24 months. Then I'm more worried about that than I'm worried about losses in the credit investments that we're making, because I think the economy will adjust. The spreads or the interest in any investments will be reduced. We were discussing before, our investments we're gaining from the credit spread and from the lower interest rates, because we have fixed credit spreads. When we entered like 2 years ago, in nominal terms it doubled.
Yeah, you lend
right?
money to a company in a nominal fixed amount. Interest rates came down and spreads came down also. So
I know that in 2 years I won't be able to get the same margins, right?
One very interesting thing also is that when you compare the credit spreads for the same company raising money outside of Brazil and inside of Brazil, it's like 200 basis points of difference, large companies. So there's still a very, and this is adjusted for taxes and for everything. You adjust everything, all the costs that you have, and then you still see that. Why is this? Because you still have a market that's not completely efficient. The investors that are down here cannot invest outside in any type of investment. For instance, pension funds, which are still going to increase this type of allocation. We're talking here to
one point that you made, it's worth mentioning that there is a intensive effort from the industry for the secondary market for fixed income securities. It's a combination of effort from CVM and the players and it was launched last year. It's an idea to bring reduce this gap and bring more juice to the market.
And one thing also I wanted to make sure that we tap into. We're talking to here most in international investors. They're looking at the country. They have the option to invest everywhere else in the world. We're living in a world that we have negative real rates around the world. Brazil, although interest rates nominals is coming down, but we still have a positive real rate. And credit on top of that, we're just discussing about how much there's different issues that are generating these spreads on credit instruments. So how can these international investors that are here participate? If they invest directly into a FIDIC, there's going to be the 6% plus the 15%, as Marcelo has pointed out. If they invest through a direct debenture for infrastructure, they're going to have all the incentives here. What kind of structures are you guys seeing for either for your offshore portfolio, either for your international investors to put into this, and also Rafael, with your more macro view on that sense? So, Marcelo.
Thank you. For international investors, let's say more specifically in the real estate arena, for example, we have some funds that we raised internationally to participate in development of middle-income housing in Brazil. So these are funds that are investors friendly on the tax friendly, given that we make the investment through FDI, and then we return the money back as dividends, which are all tax exempted. And we participate at the project level on a pari passu basis with a home builder. This has provided returns of 25% plus gross yields in hard currency. Obviously, there is the tax treatment of the investors according to their domicile, but there is, yes, opportunity to really tap very attractive risk-adjusted asset classes in real estate in Brazil. The resi sector is one of them. Now more on the retail side, shopping centers through mezzanine structures is also a very interesting target.
Warehouses also, right? Warehouses.
And warehouses on build-to-suit transactions. We also have funds with offshore money to participate on the residual equity of industrial properties. And these are things that, given its real estate, and there is arbitrage out there to tap, and this has provided equity returns of 25% plus in all these classes that I mentioned. There is obviously development risks and things, but given that these are all mitigated by very binding, enforceable instruments, we believe at RB Capital there is still a large amount of opportunities in real estate for international investors with very tax-friendly structures that they can participate and tap.
Well, thank you. Thank you for allowing me to show my optimist side. Yeah, on the financial investments, I will leave Marcelo and George explain, but there is, in any forum in the US or in Europe, or even in Asia, where you go, everybody is convinced that the incremental consumer is in emerging markets. And by that we mean China, Brazil, Russia, and the rest of Latin America, excluding Argentina and Venezuela. So foreign direct investment, Brazil has shown clearly that it has an inward-looking model, that the Brazilian consumer is a consumer that you can tap, that if you offer the right products in the right way, you're going to find demand and domestic demand. The whole idea that the middle class in Brazil has expanded with 26, 30 million people in the past 8 years shows clearly where investment could be. So what I'm talking is here foreign direct investment, and it's happening. And even with the revised 3% or 4% growth, I am very confident that the Brazilian market will continue to grow, will continue to expand, and show the possibilities for foreign firms.
Thank you. Yeah, I think you end up, you touch upon a subject that it's not necessarily the credit side, but the credit is allowing this middle class to grow its consumption capabilities. So any type of investments that we see here, our firm, we're more on the private equity side. We invest into companies that are tapping into this kind of growth of the credit. I think is interesting. And for instance, one thing we didn't discuss a lot is about factorings. Factorings have been, since when the time is time, the first way to access to credit. In Brazil, this was really dominated by families and individuals that had this. And we are seeing a big sophistication coming now more and more into it. And it's definitely where there's a lot of spreads. We're talking to, to companies that are smaller. They're smaller and therefore generates more risk from the standpoint of you have to deal with a lot of different companies to reduce really your default risk. And in essence, you still get pretty high spreads on it. So what I wanted to ask you guys is, George, you as an investor, have you seen fund opportunities from the factoring side? Have you invested? Have you not? And Marcelo, if you could talk about within your firm, have you guys seen opportunities to do that also as a investment vehicle?
You hit the point. Most of our credit structure investments are made through factorings. What we have been doing, it's even more than investing. We're helping them. We're helping them to create these investment vehicles. They are more sophisticated, more protected for the investors, and in a way, we're helping them to cut the line with the bank, because what happened to most of this market, as to any other markets, during the crisis, the banks cut their lines, so they took the money from the bank and they would lend to the companies. So what we are doing as investors, we are replacing the bank lines on a better structured product, and we helped seed a number of these funds, and that's where we think it's one of the best ways to play this thing, because as you mentioned, like we are seeding a fund, but the GP has been doing this for 25, 30 years. So it's a different, and I would say that 75% of what we're doing in credit, it's with that. The rest is in real estate.
On our side, over the last years, we have done around 8 billion reais in real estate credit, very much based on sale and leaseback or build-to-suit transactions. So there is we estimate hundreds of billions of existing real estate that never been leveraged, re-leveraged, financed, refinanced in any way. So we estimate that 80% of the corporations in Brazil, they own non-core real estate assets, which can be divested from through sale and leaseback deals, and this will originate credit papers in order for investors to go and participate. This as an off-balance structure, more on the credit spread side. Just mentioning, we have AAA names as tenants under these structures, that their bonds, they trade at 20, 30 bips over their CDS on international standard, or 30, 50 bips over the Brazilian sovereign, and the CMBS that we structure with the same credit risk attached, but added the real estate guarantee, they pay 150 to 200 bips spread. So you see the arbitrage, and we have papers backed by Unilever, Procter & Gamble, Vale do Rio Doce, all those AAA names. There are, with those spreads, and for local investors on the individual side, it's tax exempted. So you see that on the credit side in the real estate market, there is also huge opportunities, given that, just to mention, that is why we don't believe there is a bubble on this sub-segment of the total credit, mortgage financing as a percent of the Brazilian GDP hovers around 4%. And the securitization market in Brazil is around 42 billion reais, like $20 billion. Nothing compared to the $1 trillion fixed income industry, right? So, I mean, very, very early stages in that sector, just to mention the potential for the next decade.
One thing that I forgot to mention that we tapped in this in different answers is that it's important to think about what's happening in Brazil as imagine the government is playing the country with different levers. So at some point they are inducing the growth. So in general growth and specific growth. So there are a lot of special opportunities in, as you mentioned, tax-exempt investments in real estate. Banks are no longer offering CDs to clients. They are offering like this special structure linked to real estate or to agricultural business, and they are tax-exempt for the individual client. So when a client sees, they compare, they have already like 15% more gain at one side or the other. Then the government wants to increase the length, right, of the duration of their debt, because as the prior panelists mentioned, used to be like very focused on the short term. So in order to do that, they release some of the needs of the banks to withhold this cash. So what you have is that if you buy a special CD that have a longer duration, you get a much higher interest, because we have actually what you're getting at somehow a tax bracket from different tax bracket from the market. And so, but then on the other side, the government is afraid of too much money coming into Brazil, so they raise the IOF. So it looks like we are saying things going back and forth, but there are a number of opportunities, but most of these opportunities are more focused towards the local client. And then when the market goes upside down, then the government comes down and give opportunities to the international market. So it's just to give you
yeah, I think we all agree that there is room for growth. I don't challenge that idea. My point is that the speed of growth of credit, the banking system credit,
has to be watched.
Has to be watched, and what is going on, what we're talking about here, about now that I understand better your business, is yes, we need firms, we need institutions, we need players that reduce the spread, because it is a drag, it is a constraint.
From a consumption standpoint, growth. If you reduce spread or you reduce interest rates,
we have to reduce interest rates. It's moving in the right direction, and but still, no, we're especially on the consumer loan side, the fact that debt service interest in principal is 22% of households' income, up from 15% 7 years ago, really calls your attention and said, we need to monitor this, because it is clearly an accident waiting to happen if it's not controlled. Having said this, one number that we didn't mention here is, look, Brazilian debt on average is what, 597 days, less than 2 years. No, if we compare these ratios with developed countries, we're talking about 10, 20 years. People that have a debt.
But there are a number of anecdotal ways to see that you're right for the individual credit to individuals. Like, we have more cell phones than a number of people living in Brazil, right? Because you can buy a cell phone and pay in 2 years. The car industry, we have more cars than ever, because at least until a few months ago, you could buy like in 5 years. Something that was completely new. And look at what of the credit segments that is suffering most is credit leasing and loans for cars, auto loans. Go to Disney, and you depending on the time of the year, it looks like you are in any park in Brazil, right? Because you can buy and pay in 5 years. So, yes, and even the government is looking at that, because in the same path that they are enhancing the opportunities for credit and they want to reduce spread, they changed the laws for credit cards so that you cannot leverage so much as you could before. So that's the...
It's a trend, right? We are talking about a growth of wealth plus a growth of consumption power through credit expansion. But is it, we're still at the end? No, this is what we believe here, that we're still not at the end. There's still room to grow. There's several different ways of how to participate into this. You can participate through a direct consumer type of deal where you're really betting in a company that will participate on that. And you can do some arbitrages, as Marcelo was discussing, that there are here still in the market there. So what I would encourage is that if you want to have more information about this, look for any of the guys up here. I wanted to open for if there's any questions. Does anybody want to ask for a question? 1, 2, 3. No. So thank you very much, guys, for your time, and thanks a lot for listening in. Thank you.